Hey, welcome everybody. I'm Dave Etkin. I'm the director here at the Louisville Small Business Development Center, and we are joining here on a nice Thursday, semi-sunny afternoon. Thanks for taking time out of your day to join us and talk about SBA loans and other funding opportunities. And just to make sure that we don't have any technical difficulties, as always, if you look at the bottom of your screen, you'll see a toolbar. If you don't see a toolbar, just take your cursor and hover down towards the bottom. It should pop right up. You'll see the chat button. If you wouldn't mind just clicking the chat button will pop up on your right. Just type in at the bottom there, just say hello, where you're joining from, your name and where you're joining from. It's always great to see where everybody comes from around the country. This is probably the funnest part for me anyway. So, hey, Janet. Let's see, who else do we have today? There's Lisa in Louisville. Hi, Lisa. Hey, Kim. Good to see you. Tarisha, also from Louisville. Shelbyville Chase is in Shelbyville. Good to see you. Thanks for joining us today. Everybody here is okay? Can you see me? Hey, Dave. Dave Sauerbach just joined in. He has a great Sauerbach family drive-in in LaGrange, Kentucky. I encourage everyone to go out there and check that out. I was there not too long ago. Had a great time. Thanks for that, Dave. Gigi with Louisville Forward. We were just in your office yesterday. Yeah. Lauren from Mexico. Wow. So anyway, thanks for joining today. So I've got two great guests today that are very knowledgeable about what we're going to talk about. This is SBA loans and other grant funding opportunities. And, this is other than marketing, we get more requests for funding information than anything else. So I've asked Tiffany, who is on our staff here at the SBDC, to join us to talk about SBA, and then Jerian Summers, who is at the Center for Entrepreneurship at the Louisville Urban League. She'll talk about some other funding opportunities as well. So Tiffany, Jeremy, Jerian, you want to join in and say hello?
Hello everyone.
Tiffany.
Thank you for joining us today.
Hi, Jerian.
Hello, how are you, Dave?
Good. So I think everybody's ready to go. Everything looks good. So Tiffany, I'm going to go ahead and hand it over to you and let you share your screen, and let's get started. As always, if you have any questions or comments for our presenters today, you can put those in the chat and I'll get those out to them. We'll have a good discussion at the end and answer as many questions as we have time for. Again, this is a good opportunity for you to really pick some brains of a couple of great experts, and we certainly will learn a lot today. So, Tiffany?
All right. So the first thing we're going to talk about is the SBA loans, and then Jerry and she'll go over about grants. So let's get it started. Hello, my name is Tiffany Shoemaker. Here's my contact information. I'm a business coach with the Louisville SBDC. If you want to take some time and write my phone number down and my email address, I'll leave this up for a second. And I also share it in the chat at the end. Today's agenda, we're going to talk about what is an SBA loan, the type of SBA loans, the common uses of funding, local lenders, business loan requirements, and grants. What is an SBA loan? A loan that is supported by the U.S. Small Business Administration. So basically, they have funding out there and they support it. They guarantee the loan so the lenders won't be worried about startups and other businesses. They kind of guarantee the loan with you. The requirements for an SBA loan, you must be a for-profit business, so you can't be a nonprofit. You must be unable to access credit elsewhere, so you couldn't get a conventional loan or anything else like that, so you'll try for an SBA loan, and then you also must meet the SBA size standards. There are several different types of SBA loans. The most common one is the SBA 7A loans, and then it's the CDC/504 loans and micro loans. Oh, sorry. Like I said before, the 7A loan program is the most common loan that most people use because you can use it for a variety of purposes, and it's going to be issued by a private lender and it will be backed by the SBA. I have someone now who's getting a 7A loan. They're using it for a franchise, one of my clients. So that's just an example of what you could use it for if you were thinking about starting a franchise or some sort of business like that in that field or industry. The maximum loan amount for the 7A loan is $5 million, but it can go up to $5.5 million for certain projects, other projects, but most of the time it's just will be for $5 million. The maximum SBA guarantee is 85% for loans up to 150,000, 75 for any loans that are more than 150,000. The funding purposes of the standard 7A loan, like I said, it could be used for multiple purposes. You can use it for funding working capital, equipment and supplies, real estate, business expansion. So if you want to grow your, let's say you have a business and you're trying to expand it, this would probably be a good loan. If you needed some equipment for your business, maybe you need a POS system, or if you were in farming industry or something like that, you can possibly get a tractor, heavy equipment, even a car, if you needed it in your business. So we're going to go into the next type of loan because the 7A and the 504 loan are kind of similar. It has the same amount for that you can lend is the maximum is $5 million, but the reason for the 504 loan is to promote business growth and job creations. And the funding also comes from 3 different places instead of just 2, like most typical loans. So the 3 places that the funding comes from, it will be a CDC company. I'm going to go over what a CDC company is, which is a certified development company. Then it will come from the bank or credit union that you pick, and then also you, the small business owner. What is a certified development company? It's a nonprofit organization that promotes economic development within the communities through 504 loans and sometimes 7A loans as well. And this is just an example of breakdown what a typical SBA 504 loan structure looks like. So the banking will be 50%, the SBA 40%, and then the business owner will be 10%. So here's just a little graph so you can see how it kind of looks. And the total project amount was $1 million. So that's just how that goes. And then this is just the source of use. This can be an example for a 7A loan or a 504 loan. They're very, very similar. So this could be an example. So the owner's funds is at 6.5% and a documented gift. So someone can gift you some money. You just make sure you have a note or something explaining that it was gifted to you. And it's just a breakdown, and it's going to add up to 100%. And then what you could use the uses for is on the right-hand side, real estate, working capital. Then it shows the SBA guarantee and a couple closing costs. And this is, the next one is micro loans. And this is kind of how the micro loans work. The SBA lends to the lender, which will be the bank or credit, the bank or credit union or whatever. And then it just shows the process and the flow of how that works. I think my slides are out of order, but okay. Well, let's go back to talk about the goals of the 504 program. We talked about it's to create growth in the community and create jobs and retention. And so for all the money that is funded, one job must be created for every $65,000 received up to 5 million. So if you get the 504 loan, you have to make sure that jobs are being created in your company for every $65,000. And then this is just a slide to show how the SBA reduces the risk and makes it easier to access the capital. So here's the SBA, then the lending partner, the loan, the small business. So the loan's kind of in the middle, the lending partner, and you are on the other side, and then the SBA is at the bottom, kind of backing you up. Some of the common uses for the 504 loans would be buildings, apartment, real estate. You can purchase equipment with this as well, such as heavy machinery. You can do it for renovations. Let's just say you possibly bought a apartment complex and you have a company, then you can do renovations. You can add on to additions if you are in that field. The 504 loan cannot be used for working capital, which the 7A loan can. It can't be used for inventory. You cannot consolidate any debt. You can't repay any debt. And you also can't do any refinancing with this type of loan. You can refinance with a 7A loan though. So now we're finally to the microloan programs. I think my slide was kind of put in the wrong place. Microloans are mini loans is what I like to call them. You can borrow up to 50,000. The average is around 14 to 15,000 that small business owners get. The repayment terms can be up to 7 years and the interest rate varies. They kind of do a little check on you, the 5 C's. And the microloans are flexible and they can be used for a variety of things too. And they're good for startups. The common uses for microloans would be working capital, inventory, supplies, furniture, fixtures, machinery, and equipment. So you can use it for multiple things that you'll need in a startup business. And you can also be an existing business and you might not need so much money. You might need a mini loan. Like I said, is what I like to call them because they're a little small. Microloans cannot be used to purchase real estate. You can't pay existing debt, certain supplies, furniture, fixtures, and equipment. These are some local lenders that we partner with. We partner with L Home, Park Community Credit Union, JFC Navigate, Community Ventures, Metco, and Render Capital. So when you're applying for your loan, these are a few things that you want to have ready. You want to have your business plan and business history, your resumes of key management. So it will be you. And if you have any partners and you want to tell them about your experience, you want to have what the purpose of the loan is, the cost estimate for loan proceeds, and you want to have your financial statements and cash flow projections. And any legal documents such as any legal documents for your business, just saying that it's in good standing, your articles of organizations, and then you might need your personal financial tax returns and your business tax returns if you've been in business, and then the proof of equity investments, and that's for startups.
All righty, so now I'm going to talk about some grants, which is another funding source. And as I introduce myself, my name is Jerian Summers. You can go to the next slide, Tiffany. Alrighty. So my name is Jerian Summers. I'm the financial coach at the Louisville Urban League Center of Entrepreneurship. This is my contact information. So the Center of Entrepreneurship is a new program through the Louisville Urban League. Currently, we are in place to help businesses no matter what place they're in. So whether you're a startup, you're trying to stabilize, or you're trying to stage your business. So whichever stage, we are able to help. We have a team of myself and business coaches, and then we offer some professional services for businesses. So that's my contact. And then we also have a link there that you can go and get to our page to inquire, and then a phone number that gets you to our coordinator. So first point, I just wanted to go over some key differences between small business grants and other funding like the loans that Tiffany just spoke of. So grants are taxable income as well. You will pay interest on those business loans, even if they're like a micro loan that, gives you the interest back at the end of the term. If you meet all the terms and pay back, you still have to pay those interests. Unlike with grants, you would not have to. Grants do not help you build your business credit and or personal credit. They are direct competitions when loans aren't. Loans are more competitive in a financial standpoint and not business to business. And then loans can carry penalties, like if you're not paying on time, if you're not able to meet those requirements. Like she said, some of the 504 loans and other loans do require you to only purchase certain things. So what is a small business grant? A grant is money that's given to your business by the government, a company, or a philanthropist. So they can be federal, they can be private. There's a lot of different, and we'll get into some examples later, but they can come from a lot of different places. Grants are essentially free money, so you don't have to pay them back, and they're really just a helping hand to for projects. They're usually targeted at job creation, projects that traditional lenders don't support. So those, back to those stipulations of the loans, if loans aren't going to support certain projects, then maybe falling into a grant, and then increasing economic benefits for communities. So something to help the community around you. Alrighty, so the pros and cons of grants, and really it's not a lot of cons, but the pros are no repayments. Um, and when it's attached to a actual project or something for the community, which most of them do tie to, it's that fulfilling that you have of making a difference in the community that you live in or that your business is in. There's lots of grants available. They are niched, but there are a lot out. They're targeted as business, so you know that this matches your like exact business, your exact project. And it may come with free publicity. So if there's like a private lender that's giving these out, of course they want to share the good work that they're doing for other smaller businesses if they're a bigger business. So usually they want to show you off. They want to use you as like protege. So that comes in, that opens your exposure to businesses that you and communities that you might have not been able to touch historically. So some of the cons are the specifics of the eligibility. They can be very niche, down to sex, they can be down to business, they can be down to communities, a lot of different things that I'll tap into as well. But they can be time consuming for to apply or wait. Some loans can be on rolling basis. Grants are usually open for an amount of time and then they close and then they go through all the applications. So they can be time consuming in those. They can have strings attached. So you might have to report on them for 2 years or 3 years, because some of them are built into research projects. So that might be a key. And then the competition for grants are really high. So like I mentioned, the competition for grants are high. But usually if your business meets the criteria, you're more than welcome to apply for the grants. You'll see that a lot of them federally are for nonprofits, but there are plenty for small businesses and businesses as well. Small businesses grants do seem to be aimed at regions or sectors, specific type of businesses or causes, and then particular community groups. So this is just a little chart that kind of, you can see the variety of different niches that grants might be tied into. So it might just be for startup business. It might be for honorable veterans, for women, minorities. So usually a lot of they tie into like minority and women. So you'll see a lot of grants like Black women, Hispanic women, things of those. And then different causes. And that usually ties into regions, just depending on what problems that they're having in particular places. They might tie in a grant for a business to go in and help solve those problems. Different stuff, different sectors, so industry based. But those, and then the typical grant goals across the board are going to be job creation, sustainability, economic development, improved health, diversity, and rehabilitation. So these are just a few examples of grants. These are not still open. They're just, I just want you guys to be able to see the different niches that, that could be available for grants. So FedEx, pretty common shipping. They would be considered a private grantor. So they usually do 10 US business, a lump sum grant, and they usually open in February and close in March. So you can kind of see that usually, there's about a month span of it being open. So you might not know results for, 60 to 90 days. So yeah, and they announced in May, so that might be in the 90, in the 60 to 90 day range. To be eligible, you must be a for-profit business, and you have to have the following. So you have to have a FedEx shipping account. So that usually means that your business is doing some type of product that requires shipping. You have to have been in business selling a product for at least 6 months. And 6 months could be still in the startup phase, but not non-pre-existing businesses. So fewer than 99 employees, and then the grant has to be used for shipping needs for your business. So I guess that could apply to, shipping label creators, that kind of stuff. But you can see that these are pretty niche. And if your business is not checking all those boxes, then that grant would not apply to you. Then I have a couple examples just to kind of show you as well. This one as well is like a Tory Burch. Now this is a grant, but it is not tied to actually like money in your pocket. So she does a business education. So you come in and you do like a fellowship. You have to be a woman, entrepreneur who owns a larger or equal stake for a nonprofit. So that woman has to own 51% of the business. And you have to be at least 21 years of age. You have to be proficient in English, a legal resident of the US or any of its territories. It prefers that the business be in operation for less than 5 years, and generates an annual revenue of at least $75,000. They usually open up. So this one is actually opening up in summer of 23, November. But the points of me sharing these examples with you are you can see exactly like the niches that come down. Like this one has one that was tied to women been in business 5 years, making revenues of at least 75,000. So you want to be very careful when you're applying to grants to make sure that they actually fit your business. Now this one was an economic injury. So this came down from COVID, from federal funds. And the biggest things about these grants were you had to, like this one had to have 300 or fewer employees, be located in a low income community. So that's region based, community based, demonstrated more than 30% reduction of revenue during the 8 weeks, beginning at the beginning of COVID, the pandemic. And it has an exemption for smaller business with 10 or fewer employees, that had revenue of 50% or more that were eligible for additional monies. But this was one that was passed down for COVID relief. But you can also see that it was very niche, based on employees, based on the reduction in revenue. And that's also a point that I wanted to speak on, because having those records, those revenues, being able to look at your documents and know that, like, okay, did I have a 30% reduction in my revenue or not? So having that good record keeping is also going to play a part in knowing which grants you're eligible for. Alrighty. So how big are grants? Now, if you're funding a huge project, a grant might cover a line on the project. Most grants are as small as a few $100s, as large of hundreds of thousands. Those are going to be mostly federal monies that come down for nonprofits. But most are less than 10K. And for their ability to supplement for small business funding. So most of those are less than 10K for smaller projects. How do you find them? So a lot of people, if you're using like social media, a lot of people will post like, oh, okay, this grant's available, that, not really understanding that they're very niche, or that, the business might apply, and it might not even be, as easy to get as you they might make it seem. So trustworthy websites are going to be your government websites, whether that's on the local, state, or federal level. They usually have a list of their grants, and other profit, and other sources like the nonprofits and foundations as well. Small business associations. So if you belong to any of those, any of the minority groups, any of the gender affiliated groups, they usually have their own grants for businesses. Even someone like the Louisville Urban League, we do have at least usually one grant for our participants, on an annual basis, and as others become available, I do share them with my clients. And then also check in with your accountant or your bookkeeper, because as other clients are, maybe applying, they're getting their information from those bookkeepers and accountants, and they might share that information with them, like, hey, I'm applying for this grant. These are the stipulations, and then your bookkeeper or accountant knows, and they might be, open to share it with you as well. So how to apply for a business grant? Even though the money is, free, does not require repayment, no matter who the lender is, they want to know why your business needs it, how it's going to fund the project, and that you're deserving of it. So don't rush it. Put in some time into the application. Most applications are going to ask for business history, unless you're a startup, some projections, just to know that you've taken the time to really consider what this capital need is, how this project is going to affect and the changes that could come about with it. And also just to make sure that it's the right funding source for you. And then also knowing about that particular grant. So tailoring your application, do your homework as to why the grant was created and what the purpose is, and then fit your application to those goals. So you can make sure that your project aligns with the vision. And then be thorough. Expect to provide information on yourself, your product, your service, what market, demographics, and then how you plan to spend the grant. This can be done in various ways, whether you want to do one pagers with charts or graphs, budgets. So it can show the strengths and needs of your business and to have all the information you need. This is also something that I always tell my clients. You never know who you might be talking to, who might be a funding source. So one thing that we create is an elevator speech. So at the drop of a hat, if someone wants to know about your business, you're able to tell them. You're able to tell them, the goals of your business, what your business does, what it excels well in, who you are, why you started the business, to give people insight. And that's a lot of times what grants want to know. They want to know the story behind your business. So, and then also being able to keep good records. Potential funders may want to see past financial statements. They might want to see future projections if you're a startup. So use an accountant, a bookkeeper, or a program to practice good financial record keeping, because they want to see what you normally do, how your overall financial health is. And that should be something that you're doing overall for your businesses anyway. So, if you have all this on deck already and they ask for it, then it shouldn't be a situation where you're having to go and dig up financials or information about your business. So. Alrighty, so right now the Louisville Urban League has paired with Lyst and Verizon, and we have paired with them for small businesses, and we're able to do some small understanding modules, and they have a grant that's open for $10,000. So that is going to be the link there. I'm also going to drop it into the chat so that you guys can have that as well. So you can take a minute to look at that, or you can write it down. But yeah. And then we have I did see.
Wow, Jerry, that was awesome.
Alrighty, thank you, Dave.
Thanks, Tiffany. That was great too. So, so here's a good opportunity if you have any questions, just put them in the chat there and we'll get right to them. Jaren, what would be the first step someone would want to take if they are interested in just taking a broad stroke, or what would they do to, see if their business is even eligible for a grant period?
So I would advise everyone just to do a Google search. Get on Google. A lot of things are going to pop up. Go to your government, the trusted websites, the government websites, just to see, and they will have all of the stipulations for those grants on those pages. And then also, at the Urban League, we're able to provide, if you come to me and you say, hey, I want to know if I'm eligible. I did read the requirements, but I'm kind of on the line about some of the requirements. We can definitely go over those in some of our coaching sessions to be sure that they apply. And then there's also some of our coaching sessions to be able to help with reviewing grant writing and looking at those if they're going to be bigger grants.
Okay. Thank you. So I'm going to answer this question from Dave Sauerbach. He wants to know whether 504 loans can be used to convert an SBA and expand the business. And oddly enough, Dave, on the SBA website, the answer is no. However, I don't know how often they update that website. There's been some recent changes to the rules in Congress. And I don't know if they had sunsetted or not, but there for a period of time, starting last January of 22, you could do that. And there was a couple tests that you had to hit. I think the main one was that it had to positively affect the cash flow of the business. So, especially right now, there is, what the interest rates has, they are, especially on an 7A that's a floating rate. You can get some sort of relief if you have if you can get something fixed and at a little bit lower rate. I think 504 is the blended rate's probably around 6 or so. And I think a 7A these days can almost get up to 11% depending on who you're with. But I think, let's see, if I remember you have to be in business at least 2 years. About 85% of the proceeds that are refinanced have to be 504 eligible, meaning that it has to be hard assets like land, buildings or machinery and equipment, and other than the substantial benefit, the existing lender is unable or unwilling to modify your current loan to help with that. So I think that I know who you're with. I think I would circle back with those guys and check with them one more time. And then if you'd like, we can set you up with a CDC that you can talk to. So let's see. Hey, Tiffany, what is the down payment requirements from 7A loan? Can you help us with that?
So it depends. So it's 10% of whatever the loan amount is. So it depends on what you're trying to get. So it fluctuates. So I can't just give you one number of the down payment amount.
Okay.
Also, Dave, I saw one question in here from the other Dave that said, does the LUL work outside of Jefferson County? And we do pour over into southern Indiana and like Oldham County. Most of it, is just Louisville and greater Louisville area. So
yeah, thank you. All right, and then let's see. So if you have any questions, you can put them in the chat there and we'll get to them. Hey, Tiffany, can you speak a little bit more about some of the microloans that are available, say through L Home and maybe Park Financial, Park Federal? I know you've had some decent experience with those two organizations.
Yeah, so their average loan, the L Homes is, I think it's like $5,000, but it can get, like we said, it can go up to 50. You just have to tell your story to be able to get the loan. You can't just say, hey, I need 50,000. They're more easier to get, I would say, than a 7A or a 504. The restrictions, I'm not gonna say they're lenient, but they're just willing to give it to you a little more easier. You do have to have a good credit, but it can be lower than the 7A and the 504 loan requirements. Poor communities, most of the time they give you around, I'm gonna say the median is like 10 to 20,000 micro loans. They don't push out a lot for the poor community, but I have saw bigger loans with with L Homes than Port Community. Not saying that they're not good or anything, and the interest rates vary depending on your credit. And right now with the impact, with what's going on, so interest rates are pretty high. So you probably won't get a low interest rate, but the repayment terms are 7 years. And it's just easier to get. So if I was a startup, I would go for a micro loan unless you needed a ton of money.
Gotcha. Okay.
And
Thank
then
you.
Tiffany, I just have a question. Does Elhome do like some character-based lending as well with their microloans? I know some of their other
Like,
funding.
so you mean
Um,
like, go ahead.
oh, so I was just saying more that it can be like rated not just based off like credit score, but some other character, how well you're paying your other bills and stuff like that.
Yeah, so that's where your business plan and then the other stuff that's required. So you can kind of tell your story. Say, let's just say you during the pandemic, you got behind on some things and your credit dropped. Like you just need to be able to tell your story to them to let them know what's going on. And it could possibly be funded. So I would say yes, that could possibly do that like that. But you want to be able to, if they have a question, well, you don't want them to have questions. You want to give them enough information where they don't have any questions like this happened, because you want to get approved and you want to tell your story and leave nothing out. So during the pandemic, if I had some problems, I'm going to put that in my loan package. So I just tell them like, hey, this happened, but look, previous to COVID, I can show that I was making this amount of money. And now COVID's, well, it's not really over, but
Yeah, it's down a little bit,
yeah. So then I'm back up and running. For instance, they could go for like a daycare or something. So, they shut down, so they wasn't making any money, but they could show pre-COVID, they were making money. Now they're kind of opening and it's a need because people are back at work. So you can show like, okay, now I'm full. I have all the kids back, so I'm making money. So that you could tell that part of your story in your loan packet to them.
And also, well, me and Tiffany, we paired together. We're kind of in a funnel from the Louisville Urban League to the SBDC. So a lot of like one of the key points that I mentioned to my clients when we're talking about getting capital from loans is the micro loan does have that kind of interest-free-ish is how I describe it. So they're able to, if you complete all the terms and pay it on time, they give you back that interest rate, like all the interest you paid back in a lump sum. So having that, I think, is just a really key part to, for startups and understanding, because a lot of times that's what my clients, when they come to me, they're like, I don't want to pay loans. Like I already got to pay it back and then I got to pay interest on top of that. So I think that's really good for like startups and people who are just starting out at loans. So they get a feel before taking on a lot of capital.
Yeah, I would recommend a micro loan for startups if they don't need a huge amount of money. It just gets you your foot in the door. It builds relationships with lenders. And let's just say you have to go back. They might also offer different SBA loan programs. They might not just offer micro loans. So that's kind of for the credit unions and the banks. So I do suggest if you need money, start with the micro loan if you're a startup, if it's not a huge amount that you need.
Yeah. Jerry, on grants, do you need to hire a grant writer to make applications to some of these grants, or what do you got to do?
So as far as grant writing, I think it's probably per grant. Like the few that I showed an example with, the applications were pretty standard. They might have you, tell your story, which just includes, where your business came from, where it's going, if you had any rough patches, and what the project is that you're looking to fund, who it's going to impact. Like, is it going to impact the entire community, just the people that you serve? If it's a product base, how does it help the people that are using the products? How can you make these products, get to other people, get to other communities? So I would say usually, if you have those bases down, and you are, able to write, then maybe having a coach to kind of look over it, edit it for you. But when you get into like big federal, grants and things like that for bigger business, yes, a grant writer, because it requires a lot. Those grants really require a lot. But for small businesses, I think that you can usually do them yourself, and then have someone edit them or read over.
Yeah. Just along those same lines, Gigi wants to know, Tiffany, how important is a written business plan to secure funding, and what if What happens if you're not a strong writer?
You have to have a business plan. Majority of the time, I'm gonna say always, and you should have a business plan for your business. It might change, but I think anyone starting a business should have a business plan. That's the first thing that I tell my clients to do. And if you're not a strong writer, you can start off slow. You can try a business model canvas. You can try a one-page business plan, and then, like she said, get your business coach, and we'll kind of help you along the way. So it's hard, but it's doable. And then it's plenty of resources that you can use, you can check out and, just try to get it done yourself. But we at the SBDC and then at the Louisville Urban League and Louisville Forward, we can help you out with that.
Yeah. As I say, there's definitely a lot of resources to help you get that business plan together. So
Tiffany, here's another question for you. Is it typical to be asked to use your home as collateral on an SBA loan?
Yes, it is typical because they want collateral just to make sure that if you don't pay back the loan, that it's some type of guarantee, they'll have something to get their money back. So yes, you could use other things besides your personal home as collateral, but it is typical that they might ask you to put that up.
Yeah, that's true. Yeah, I get a lot of comments too about this, the thought that if you have a business, then there's business credit and there's personal credit. It's two different things. But and that's true if you're talking about a big company like Ford, but most small businesses, the small business is you. And so most of your assets will be your personal assets, not in the business. So they'll often require that. The SBA does require what's called just like a or general guarantee, which means like everything you have is sort of part of the guarantee, part of the collateral. So yeah, let's see, one other one from Lisa. Tiffany, what is the current timeline for processing, approving SBA loans these days? Microloans, regular loans in Louisville, do you know?
Microloans get approved pretty quicker than the 7A and the 504. So it depends on your lender, how fast you get them back all the stuff they need. You need your financial projections. So it depends on how prepared you are. I would say funding comes quicker from microloans because they don't require as much. It's still kind of the same, but they're just more lenient to you. But the process kind of depends on you and the lender. So I'm gonna say a turnaround time average 30 to 90 days, depending on you and the lender.
Jerry, what about applying for a grant? What's the time frame there? How does that work?
So usually personally at the Louisville Urban League grants, we usually open up the application for 2 months, so about 60 days. And after we do that, we're going to go through all the applications and then turn around and have like our results or who's going to get the grants. So I would say probably around 90 days. Now some other bigger grants do like open their applications for 90 days. Some grants are like after we get 100 applications, we're closing it. So it's also another reason to have all of your documents together so that you can apply as soon as possible whenever you get the information. Because I also, if they're saying after 100 applications, you don't want to be the 101st applicant because now you're out of the picture to get the grant. So you want to be one of the first people to apply.
Yeah, sound like the Hunger Games.
Yeah, no, it really is for grants these days.
So is there competition among banks to issue SBA loans or I guess Dave's asking, is it good to talk to more than one bank?
I would always talk to more than one bank because interest rates and all type of other things, they might offer products that one bank doesn't. So I would always say, don't just apply to one. I would have I'm not gonna say not apply, but I would do my research on multiple. I would apply to one, but as far as I would search, I would do my research and see what they all offer, because each lender, banks vary. They still have to follow the SBA rules, but they could offer different things for you. So I would shop around before I say, hey, I'm just gonna pick them. They do have to do all the same requirements that the SBA puts out there, but I always would shop around. Kind of think about a car. You're not going to buy the first car you see. You'll kind of go to different car lots. So kind of think about that in that type of aspect in applying for loans.
Yeah. Yeah, it's kind of crazy, but like if you were going to buy a new TV, you would go to several stores and check them out and, see how it all worked out. But like when you're shopping for loans and you go to different banks and they pull your credit each time, you get, your credit goes down for that, so it's kind of, you're being a good consumer of loans, but you're getting punished for that. So you have to be careful when you go to different banks to not allow them to pull your credit until you make a decision on that. So let's see. Lorena asked, is there a good lender we can recommend for microloans in Louisville? So yeah, we just had that list that we just put up, and we'll send you a copy of this presentation. We'll have it on there, but yeah, El Home, the City of Louisville, Park Community Federal Credit Union. Who else, Tiffany?
Brenda Capital, Community Ventures.
Yeah.
You said Medco already, but yeah, you will get a list. And if you want to connect with the coach, we'll find which lender for the microloan is best for you. So I don't just want to say like, hey, pick that one. We can kind of go over your business and what you have going on, and we'll say, hey, we think this might be best. We'll give you a list of a few, because I'm not going to pick for you, but these are the ones that I recommend.
Right. Great. I think that's all the questions we have. Unless somebody pops in here right under the wire, but Tiffany, Jerian, I want to thank you guys for coming and sharing all that today. That was really, really interesting, and got a lot of great information from this today. So appreciate it.
Well, thank you for having us. And if anyone likes to connect, I think it's my email is in the chat, so feel free to reach out. We are business coaches, and we would love to help you on your journey.
Mm-hmm.
Yes, it's always a pleasure to be here with the SBDC and partner with you guys. So thanks for having me. I did put my email in the chat, so feel free to email. And then also in the slide, there'll be our number for our coordinator. And you can always visit our website as well, lul.org. And I'll put that in the chat as well, to get to our Center of Entrepreneurship page and see what all we have to offer for you or your business.
Okay. Well, thank you guys. And again, we'll send you the slides and a recording here later on today or tomorrow. And so thank you, Jerian. Thank you, Tiffany. And thank you, Janet, for running the show and behind the scenes there.
Thank you, Janet.
See you guys. Thanks so much.
Okay. All right. Goodbye, everybody. Thanks for joining us on a Thursday. We'll see you soon.
Bye.